Is Mike Sullivan. I'm a former IRS agent and teaching instructor. I worked at IRS over a decade. Me and my M&M man welcome you to our YouTube channels. My YouTubes are short, sweet. They are no more than 3 minutes long. I want to talk to you today about the truth about the offer and compromise, and for you to know that not everybody is a suitable candidate for the offer and compromise. As a former IRS agent, not only did I accept and deny offers, but I was a teaching instructor for this program, both in a local office and actually at the National Regional Center in Atlanta, Georgia. And what happens is everyone is caught up that they can settle debt for pennies on the dollar. First of all, the advertising is true, but in reality, few people qualify, and you've got to really understand the program. So I just want to tell you a little about it because it may not be for you, and I don't want you giving your money to anybody if you're going to get ripped off. There's two things that, first of all, the IRS looks at a certain financial statement, and that's the 433 OIC, 433 AOIC. They look at that form and they make their determination on the documentation of that form. And there's two things that you need to know about that form itself. The agent is only looking at really two main things. What's the liquidation value of your assets, and what is your income minus your expenses? IRS will not settle for any less than the full value of your assets. Your home is discounted by 20%. But if you have a value of $150,000 for everything, pension plans, cars, money in a bank, everything, you can't settle for any less than that. Don't even go that way. Don't even put in an offer. IRS isn't going to allow it. The other thing they're looking at is your income versus your living expenses. At the end of the day, what IRS is going to do is they have a certain standard of what they allow you to live on a monthly basis. There is a national standard, a local standard, and a regional standard. And if you fall outside of that standard, you're going to just pay the money to IRS. IRS controls, for payment purposes to them, how much you are allowed to use for expenses. So if you have $1,000 left over according to their skinny schedule, IRS is going to say that $1,000 belongs to us for the remaining months you have left on your statute. So they simply add whatever you have left over for your assets and whatever you have left over at the end of the month times the number of months you have in the statute. You put those two together, and that's your base offer and compromise. You must know the formula. IRS has a pre-qualifier tool at irs.gov. If you want to fill out a 433 OIC and send it to me and keep your private information off, I'll let you know whether you qualify for it. Do not give your money to anyone until you speak to an expert, and if they tell you to go and you can rely on them, let them take the money and go, and let them receive the money, file the offer. Two things you have to know. You have to be current. You must be current on all your tax filings, and you must be current in the year you're in on withholding or Social Security. Thank you. Me and my MM man appreciate it.